All right, check this out, everybody. First, I'm going to show you how you can save $40,000 on your mortgage, and then I'm going to show you how you can take that $40,000 saved and turn it into $131,000 extra in your pocket. Let's dive into it. So to get things started, let's pretend that you just bought yourself a $350,000 house in your dream neighborhood. So before we go any further here, let me just be the first to say congratulations on the purchase of your new imaginary home. On this home purchase, you decided to put 20% down, which would be $70,000, using conventional financing at a 5% interest rate, since that's where rates seem to be hovering right now. So essentially, you're paying interest on the $350,000 minus that $70,000 down payment, which is $280,000. So this is awesome. You've got $70,000 of equity in your new home, you're getting yourself settled in. But what if I told you that by putting just $100 extra per month towards your mortgage payment, you not only could pay your note off faster, but you could save yourself $40,000 in interest payments in the process. So simply by doing that, you just saved yourself $40,000 that would have been spent towards interest going to the bank that you would have never gotten back, that you can now put towards home remodels, home improvements. Hell, you could even put a kid through college with $40,000. But let's take it one step further. Let's divide that $40,000 across that 26-year payoff period. When you do that, you get about $1,500 per year on average that would have went to the bank toward interest that you would have never gotten back. Well, let's say instead you habitually put that $1,500 saved every year into a standard S&P 500 stock portfolio. And let's conservatively assume that over that 26-year period, you average out at an 8% return per year. By the time you cross that 26-year mark, not only do you have your house fully paid off while having saved $40,000 in sunken costs in the process, but you now have a stock portfolio that gained over $90,000 in positive interest that now belongs to you instead of the bank, with a total portfolio balance of just over $131,000. Now you've got yourself a fully paid off house that's also been appreciating for the last 26 years, so it's worth way more than when you bought it for $350,000 26 years ago. And you have a diversified stock portfolio worth an extra $131,000 simply by taking advantage of this one little hack. And by the way, folks, you can even get more aggressive with this strategy and put more money towards your principal every month, saving you more time and more money in interest payments. By increasing that number from $100 to $250 per month, for instance, you shorten the payoff from 26 years to 22 years while saving almost $80,000 instead of the $40,000 that we talked about. This is a really great trick to use when interest rates are a little bit higher like they are right now. By paying a little bit more now, you end up paying that note down quicker and essentially can offset those higher rates as time goes on. And there you have it, everybody, a beautiful hack that you can use that can save you thousands of dollars on your mortgage. If you have any questions or if you're thinking about buying, selling, or investing in real estate in 2022 and you're curious what that might look like for you, I would love to be your realtor and help you out, answer any questions that you might have. My number is 502-500-6469, and I'll be here if you need me, so don't hesitate to reach out. Thanks. See ya.